A nation that sits on top of 17% of the world's proven oil reserves just told its citizens to prepare for austerity. A kingdom that was spending $1 billion a week on mega projects quietly froze billions in contracts last year. And a crown prince who promised to turn Saudi Arabia into the most powerful economy on earth by 2030 is now running out of time. And the numbers are starting to tell a terrifying story. But here's the question that nobody is asking loudly enough. What happens to the entire world when Saudi Arabia, the financial spine of the global oil order, the military anchor of the Middle East, the kingdom that essentially built petrodollar dominance, starts to crack from the inside? Because right now, going into 2025 and 2026, something is going seriously, deeply, structurally wrong inside the kingdom of Saudi Arabia. And the signs are everywhere, you just have to know where to look. The breaking point didn't come from one single event. It came from a convergence, a perfect storm of financial reality, geopolitical fire, and an oil market that simply refused to cooperate. Let's start with the numbers, because the numbers are brutal. Saudi Arabia needs oil to trade at approximately $96 to $98 per barrel to balance its national budget. That's the fiscal break-even price. But for the past 18 months, oil has been trading between $70 and $80 per barrel. Do the math. Saudi Arabia is spending more money than it earns every single month. In 2024, the kingdom posted a fiscal deficit of over $21 billion. And projections for 2025 and 2026 are even worse. But here's where it gets explosive. OPEC+, the oil cartel led by Saudi Arabia, has been cutting production since late 2022, removing more than 5 million barrels per day from global supply. The goal was simple: push prices back up. It didn't work. Why? Because the United States is now producing more oil than any country in history, over 13.3 million barrels per day. American shale has shattered OPEC's control over global prices. And then Donald Trump entered the equation. In early 2025, he publicly pressured Saudi Arabia to lower oil prices, making it clear that the United States would not prioritize Saudi fiscal stability. That marked a major shift. A rupture in a relationship that has defined global energy politics for half a century. And Saudi Arabia had no clear response. Now here's where the story moves from concerning to genuinely alarming. What most people see is a country dealing with low oil prices and budget pressure. But beneath that surface lies something far more structural, and far more dangerous. Layer 1, the mega project strain. NEOM, the flagship project of Mohammed bin Salman, is under serious pressure. Plans for the line, originally expected to house 1.5 million people by 2030, have reportedly been scaled down to around 300,000. Contractors have reported payment delays. Some have walked off projects. International firms are now in disputes over unpaid contracts. The original $500 billion vision is being quietly re-evaluated. Some analysts now believe realistic investment may land closer to $100 to $150 billion, and even that depends on oil revenues that aren't materializing. Layer 2, the employment time bomb. Saudi Arabia has a population of about 35 million, with roughly 60% under the age of 30. That youth bulge is both an opportunity and a risk. Vision 2030 was, at its core, a job creation strategy. But youth unemployment remains significant, and the private sector isn't expanding fast enough to absorb new workers. Meanwhile, foreign labor still dominates large parts of the workforce. Government salaries and subsidies account for the majority of household income. If those weaken, social pressure rises, quickly. Layer 3, financial strain. Saudi Arabia has been issuing billions in international debt. Its sovereign wealth fund has been pulling money from global investments to support domestic spending. Even Saudi Aramco has faced pressure, balancing dividend payouts with long-term investment needs. For a country sitting on vast oil wealth, borrowing at this scale signals liquidity stress. Layer 4, the military burden. Saudi Arabia spends around $75 to $80 billion annually on defense. one of the highest ratios globally. The war in Yemen has already cost an estimated $100 billion, and tensions with Iran continue to simmer through proxy conflicts. Now here's where everything connects. The Iran-Israel escalation has added a new layer of uncertainty. At the same time, Saudi Arabia had been moving toward normalization with Israel, a potential deal that could have reshaped the region and secured stronger U.S. guarantees. That momentum has slowed dramatically. And now Saudi Arabia finds itself caught in a dangerous balancing act, maintaining ties with Washington while deepening economic links with China. China now receives roughly a quarter of Saudi oil exports, and cooperation between the two countries is growing. But leaning too far toward Beijing risks weakening U.S. security commitments. So the kingdom is stuck between two superpowers, unable to fully commit to either. Meanwhile, Iran watches closely. An economically pressured, geopolitically uncertain Saudi Arabia is exactly the kind of environment Iran's regional strategy is built to exploit. And if a direct conflict erupts, Saudi infrastructure, especially oil facilities, becomes a prime target. That would send global oil prices surging, triggering economic shockwaves far beyond the Middle East. Because this isn't just about Saudi Arabia. This is about the entire global system, the petrodollar system that has defined international finance for decades. Oil is priced in US dollars. Saudi oil revenues are recycled into US assets. That system supports the strength of the dollar and, by extension, American global power. If that system fractures, the consequences would be massive, for markets, currencies, and geopolitical stability. Now, to be clear, Saudi Arabia is not collapsing today. It still has hundreds of billions in reserves. It still controls enormous energy resources. And it still has a highly centralized state capable of maintaining order. But the trajectory is shifting. The fundamentals are under pressure. The margin for error is shrinking. And multiple stress points, economic, geopolitical, and structural, are intensifying at the same time. So the real question isn't whether Saudi Arabia is failing right now. The real question is, what happens if these pressures continue to build? What happens to oil markets? To global finance? To regional stability? Because this story isn't over. It's just beginning.